Welcome back, everybody, to the Nomad Hedge. In today's video, we will analyze the price action here for the S&P 500, and we're looking at the ticker symbol SPY, and we're going to find out if the bulls are still in control here, or if we can see more distribution ahead. So when we take a look at this market, we are basically trying to find out whether we are concluding wave 5 or if we've already concluded wave 5. Now, since the S&P 500 broke out to new all-time highs, the odds favor that we will likely see the S&P 500 moving higher to conclude wave 5. Thereby, we have already completed wave 3 and wave 4. And so when we also take a look at the long-term trend here, especially from April lows, we can see that the S&P 500 has respected this trend and that the bulls are still in control. So there's some key levels to watch here. But when we take a look at the market structure here from an Elliott wave standpoint, where and how wave 5 could play out, we're looking at a potential base over base structure here. So we have a larger base here where we found support here at this long-term trend again after wave 4, and then we have another smaller fractal base within this larger base. So we could be seeing the S&P 500 move something along the line of this, and then have a last push here towards wave 5, and here you have wave 3, 4, and basically you're concluding wave 5 there, and that will be the last wave of this minor degree. So we're looking at two levels here, 730, 720. Obviously, we could go much higher than that as well, but these are some theoretical levels that we are watching currently. So that's basically how we view the S&P 500. And we're also going to be taking a look at Amazon and why that stock matters. But just to show you what levels are important, obviously we don't want to break below wave 4 here, because that would just then confirm that this entire trend here has completed. But one could also make the case that as soon as you're breaking the long-term trend here, we are basically done with this entire move, and that the odds favor that the S&P 500 could move lower. Now, when I take a look at the structure, you could also argue that this could be a 5 ways up, and then we could see another drawdown here where we have a potential larger base of wave 1, 2, and then we could see a strong rally here towards wave 3 and then 4, 5. So that's also a possibility, and I want you to be aware of that. So that is why we look at wave 4 here as the key risk level to watch, and we don't want to see this one broken. Now, if you want to be early and you don't think that the S&P 500 is going higher from these levels, you can move your stop to around the 670 level, and that would give you an early confirmation that we are likely heading lower. But again, I mean, you're breaking the trend here, but we could still find support somewhere here and set the stage for another 1-2 base. Okay, so the market sometimes does that, and I want you to be aware of it. So that's why we highlight that wave 4 here is an important level. Now, I talked about Amazon and why it matters, and so we're going to take a look at Amazon here. And so Amazon has been one of these stocks that have been late to the rally, right? So we've seen Google, we've seen Nvidia, they've all rallied a lot since their April lows, but Amazon has been one of the Mag 7s that have lagged behind. But we're seeing a strong upside bid here, and I would say Amazon, alongside the 493 stocks within the S&P 500, are really making the push higher here for the S&P 500. And that is why the SPY here, it's not showing so much momentum towards the upside, because if you take a look at the Mag 7s, let's start off with Nvidia, for instance. These stocks have lagged, right? So you see Tesla here breaking down. Google is showing some upside strength. We could put Google here in the same category as Amazon. But again, when we look at Google here, it's had a huge, massive upside move here since the April lows. And we do think that it's going to show some similar structure here with the S&P 500. Either it's going to break out to new all-time highs, or we're going to see a break of trend. Now, for that matter, we're going to take a look at Microsoft, and then you do have Apple here, Meta. They've all sort of like lagged behind. But Amazon is doing a lot of the lifting here alongside Google. But Amazon is still that stock that's been late to the rally. And so if we take the 100% extension here from this level here, we can see that if we're going to fail this level here, then we could be seeing a wave B here, which means that this entire move here could have just been corrective. And we're looking basically at a wave A, B, and then you have your drawdown to wave C. If Amazon begins to fail at these levels, the S&P 500 is going to take a hit. Okay, so the market is right either way. It's just what's going to happen and what's going to trigger a potential sell-off if we're going to get one. But again, as long as we're above this long-term trend here, the bulls are in control. And I do think actually that we're going to get a structure where we have a wave base over base structure, and that we're going to see something along the line of this, where we have 3, and then you have wave 4 here, and then the last push towards wave 5. So I think that's our primary view right now. The secondary view would be that we break this trend, we find support here, and then we fire up, okay? And our stop here and our risk level will be wave 4 here at around 650. So that's basically how we view this market. And we know our risk level, our stop levels, and we want to get out of this market. But for now, the bulls are in favor, and we are also bullish here for the S&P 500 to conclude wave 5 before we get a major correction here for the major indices. So that's basically how we view the S&P 500. If you haven't already, consider liking and subscribing. You can follow me on X if you haven't already, and I'll keep you guys updated in future videos. So take care for now.